What is going on, everybody? Welcome into another edition of the Daily Energy Stand-Up here on this really chilly Thursday, January 26th, 2023. As always, I'm your humble correspondent, Michael Taylor, coming to you from an undisclosed location here in Dallas, Texas. As I mentioned, it is actually kind of cold here. I'll admit I had to wear a jacket. So for everybody who thinks it doesn't get cold here in Texas. Actually, I'll admit it gets a little cold. I had to throw a jacket on, but it's unfortunately not doing much to impact natural gas prices, the temperature here in Dallas. So hopefully that translates here at some, because we'll cover all that here coming up. But I am joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood. Was that a fur coat or did you just take your shirt off?
It was a fur coat, actually. I wore full on deer skin. For sure. Mountain lion, actually. It was mountain lion. Can you imagine me rolling into the office with some mountain lion? Just a mountain lion, and then the hood is the face.
You get shot around here doing that.
Stu, you look like one of those. I've always thought this. You look like one of those people that as a kid you wore the raccoon hats with the little. Did you?
Yes. And my toy when I was growing up was a metal hoop, and I'd run behind it kind of like a barrel hoop.
Oh, okay.
I was old. We didn't have toys.
Yeah, no kidding. Well, we've got a lot to cover in today's show, Stu. You have a great show lined up for us. We're going to start first domestically here. The Texas Oil and Gas Association released its annual energy economic impact report. We have an article on Energy Newsbeat about that, which we will cover. The next article is the G7 agrees to review level of price cap on Russian oil in March. Interesting. Next one, this is the one that I picked out. Central banks turn to gold as losses mount. We'll cover it slightly, mainly just, in 2022, we know that central banks have purchased the most amount of gold in history. I think there's something in there that does not bode well for 2023. Stu is a little bit chapped by ExxonMobil coming out and halting routine gas flaring in the Permian. They want others to follow. I'll just leave it at that and let you take it over, Stu. The EIA also released its short-term energy outlook for January 2023. We've got a great article on that. And then finally, U.S. oil refiners set for a strong Q4 earnings as margins stay high. I'll kick it over to, we'll bring it over to me then, and I will cover oil and natural gas prices, which, as I mentioned, are below $3 for the first time since January of 2021. Yikes. We have all of that in a bag of chips coming up, guys. But first, check us out, www.energynewsbeat.com. It's where all the articles that we cover. You can find them there. Hit the description below. Check out dashboard.energynewsbeat.com, the best place for all of your oil and gas data news. Enough of the pleasantries, though, Stu. We've got loads of great stories. Where do you want to begin?
Well, let's start with TXOGA and their annual energy economic report. This is just amazing, Michael. Texas is the 9th biggest economy in the world. And how many billions do they have left over after oil and gas revenue? 24 billion.
Yeah, I mean, that's pretty sane. So what he's referencing is, again, fiscal year 2022, the Texas oil and natural gas industry paid $24.7 billion in state and local taxes and state royalties, by far the highest total in Texas history, shattering the previous record of just over $16 billion set in 2019. That's by 54%. Basically, that translates into $67 million every single year. To give you an idea, production taxes, which are tied to the amount of oil and gas that's actually produced, increased by $5.8 billion, a 116% increase. In royalties to state funds increased by $2.2 billion, a mere 102% increase. To give you an idea, Stu, in 2022, 99% of the state's oil and natural gas royalties were deposited into the public school fund and public university fund, which supports Texas public education. Each fund received $2.1 billion, more than double the amount from last year. So,
try this.
I mean, Texas probably got some great schools.
Oh, yeah. And try this one. In 2022, the industry employed 443,000 Texans who earned an average of 115K each, roughly 40% average pay in other private sectors. Our oil and gas folks work hard for that money. You
Oh,
can't,
yes.
I mean, those are some hard shifts out there. Those are some hard working folks. Even in the offices, they don't have the same work ethics or anything else. It's tough business in the oil and gas space. I got a little work.
Oh,
I got to get a little bit of my work up here for this next article.
yeah, we gotta we gotta get you we gotta get you revved up here. But I think it just goes to show there are upsides to increase in oil and gas production that is ubiquitous across political spectrums, and that's this money's going in these state royalties that all oil and gas that is evil that all these evil oil and gas producers pay is going directly back into the schools. I mean, this isn't some slush fund going somewhere. I mean, there's I would love to see where Texas ranks on public schools. I bet they're close to the top, if only for this reason.
Let me throw this one at you, and that is California. California is in a deficit. They owe a lot of money. Texas got a lot of extra money. What's the difference? California is buying all. Newsom is shutting down the oil and gas industry. They're importing 70% of their energy into the state, paying China, paying all these other people. They're tearing apart the Amazon. And we're supposed to sit here and say that Texas is bad? No, I like me Texas. Sorry.
No, I'm with you. There's a reason I'm here and not anywhere else. So
Right.
I'll say that. We're gonna pivot now to our next section. We have Governor Gavin Newsom here live. Stu, we're going to you and Gavin.
Hey, Governor Gavin, I'd like to ask you: do you really think the Second Amendment is a death
Start with the Second Amendment question.
Well, yeah, he was just saying that today. Say it's the Second Amendment is a death pact. That's about
it's insane. All I want to do is go out and eat at the French Laundry after this. What do you got next?
Let's go to the G7. You can't buy this kind of entertainment today, Michael. The G7 agrees to review level of price cap on Russian oil in March. Okay, for our podcast listeners, I'm doing
for our podcast listeners, Stu, you got to bring the mic closer to you.
Okay, I'm bringing my palm to my forehead.
Thank you.
Oh my gosh, this is about one of the dumbest things I have ever heard in my life. Okay, sanctions don't work. All they do is increase the pricing. This brings up a very big reason about your other article for gold. Why are all the banks moving to gold? It's because this is one of the main reasons that the dollar is being moved away. You have China, you have Russia, and you have all these others are moving oil away from the dollar standard. What's the only way countries are going to be able to follow back on this? By going to the gold standard. So all these are interrelated, and it's painful because nobody realizes that's in power. So
yeah, I thought it was interesting. So specifically what the G7 did is they planned on February 5th to set two different price caps, one on products that traded a premium to crude, such as diesel or gas oil, and one for products that traded a discount to crude, such as fuel oil. I think it's very interesting, Stu. Here's the quote from U.S. Deputy Treasury Secretary Wally Amenyamu, who met virtually. Oh, that's a tough job. The deputies agreed that this approach will better calibrate the price cap policy for refined products, given the wide range of market prices at which these product trades. I mean, it's the blind leading the blind.
It is. And it's kind of like that meme that I put out.
Yeah. You're all over the memes. I mean, if you guys haven't looked at Stuart Turley's Twitter handle, I mean, it's insane. I look at it. It's absolutely insane. Well, what's your handle? Is it Stuart_Turley 16?
Stuart Turley 16. That's it. Stuart Turley, all caps.
Turley 16. Check him out. I am M Tanner _1. Give us a follow. I'm not nearly as fun as Stu though. So
Oh, that was a good one though. I got to admit my squirrels.
And
Biden's. Let's
yeah,
go to the
next up here, we've got central banks turn gold, turn to gold as losses mount. I really think it's just, as Stu mentioned, there's a lot of different factors at play. But as I mentioned in the open, central banks in 2022 purchased the largest amount of gold in recent history. According to the World Gold Council, central banks purchases have reached a level not seen since 1967. In fact, the world central banks bought a whopping 673 metric tons in 1 month, and that in the third quarter, that figure is estimated to reach 400 metric tons. I mean, just to give you guys an idea, that's 1967. We were on the gold standard. So, I mean, you know, I think, Stu, you did a great job of talking about what does this mean? Why is everybody moving to gold? Well, it's because we're in an inflationary period right now. I mean,
Right.
It's clear that the way the fiat currency has been managed up till now has been lackluster at best, and there's a lot of dollars chasing very few goods, and things are continuing to rise. Does this price cap do anything to help? No, because the Russians are back on a gold standard. There's a reason Russia's on this. So, Stu, what you got to pop in here? What are you doing?
Okay, here's where it gets the numbers hit the road here. In the Financial Times claims that the central banks are already suffering significant losses as a result of falling values of the bonds. By the end of second quarter 2022, the Federal Reserve, the Fed out of the US, had lost 720 billion, while the Bank of England had only lost 200 billion. See where the difference is? I would rather lose 200 billion than 720 billion.
Yeah, what's a few billion between friends, though?
Okay. What else you got?
Wow, what's next? You want to go to Exxon or crude oil production?
Exxon has routine flaring. Michael, this article is Exxon halts routine gas flaring in the Permian, and they want others to follow. That's really,
nice.
really nice of Exxon. That is so ESG friendly of Exxon. Let's give them a big round of applause. What a bunch of morons. Let me just say this. 50% of the US oil and gas, I'm on a roll today, and this one got me worked up. This one, 50% of the E&P companies produce, privately held companies in the US produce 50% of our oil. In Texas, over the last 5 to 7 years, Texas voluntarily, the people of Texas, the E&P operators, have cut flaring to the bone. There is it is significantly different. Did some IR guy of the week wake up and say flaring is bad and everybody in Texas has already been getting rid of flaring? This one got me worked up and saying, oh, everybody else needs to follow us. You morons. Sorry.
Yeah, I mean, I'm going to push back a little bit. I think there's a decent amount of flaring going on.
There is, but it's not like it was. Now, have you ever looked at Iran? Have you ever looked at Saudi Arabia? I mean, there's global warming just because of that. And if the wells are designed properly and done, there's takeaway before you can ever do it. And there's a ton of Bitcoin miners out there that drop in a mining facility right at a wellhead, and boof, you got some Bitcoin mining going on. So I'm gonna push back again. We're gonna have a pushing match here because I'm gonna say, have you ever seen Iran?
Yeah, I mean, I guess you could say that about anything, man. Have you been to? I mean, everything's probably worse than Iran. I bet you there's not one thing you could come up with that's better. What is this? Is the elevator music?
Yeah, the imam's going around beating people. That would be the only thing I could think of. I don't.
You can legally punch somebody because you're an elder. That's what you can do. You can legally assault me because technically you're my elder. Anytime I claim you have the Zika virus, you can just death.
We know who the real guy, the master on this podcast is, and that's you.
Yeah,
So
it's
no
not
way.
me. Here's the other thing. I just want to point out in this article. There's I mean, one of the funniest quotes of all time. This made the article. Burning less gas during production is an easy way to curb greenhouse gas emissions and increase gas production, according to the genius consultants over at Rystad Energy. I hope that cost six figures for them to come to that conclusion.
Oh, yeah.
I hope it was six figures. I hope it was a fat check. I hope they brought in multiple people just at the end of the day say, you know what? We burn less gas during production. We could eliminate greenhouse gases and increase gas production. And they'll go, genius.
Do you remember Johnny Carson? This guy, this comedian, Johnny Carson. He always had the amazing Kreskin. The amazing Kreskin I've done before, and he pulls out his envelope. And the question is, who is IR guy of the week? Oh, let me go over here. That guy, let me open this up. It is the guy from Rystad. Let's hear it for everybody. Yeah.
Rystad guy. Oh, that's genius. It just, I was literally laughing out loud reading this quote. It was, how you say LOL and you don't really mean it. You just say it to like filler in the text, just so you don't look weird. I was actually laughing out loud reading this. So,
okay.
Let's do U.S. crude oil production. Stu, new records, it looks like.
And I bet there's lowest flaring going on.
Yeah, there's probably zero flaring in record production. Yeah.
The big paragraph in this one, Michael, is we forecast U.S. benchmark West Texas Intermediate. That Michael, that's WTI. Mines guys.
Thank you.
WTI is. So crude price will average 77 per barrel in 2023 and 72 in 2024. Speaking of amazing Kreskin, holy smokes, how are they able to figure that out? I can't even figure out how to get to the bathroom half the time. That is not, you can't do that anymore.
I mean, they're probably just doing this. They're probably just licking their finger and just putting it up in the air and be like, I wonder what this gets me. 77. I mean, they're being conservative. You'd rather be more conservative than you would positive. But, I don't mind that average. I don't mind that average. That seems more realistic than $100.
Yeah. I mean, which would you rather be? Forrest Gump, who's dumb and happy? Or would you rather be smart and stupid and predict something like this? I don't
I don't know how to respond other than to give you guys an idea. The EIA, they forecasted the United States will average 12.4 million barrels per day in 2023 and 12.8 million barrels per day, surpassing the previous record amount of 12.3 set in 2019. In 2022, we averaged 11.9 million barrels per day, and that was due to the Permian region, mainly increase in the Permian and offshore. And it looks like 2023 is mainly grown by offshore as well. Peak oil, it's not here.
I believe there was an article, offshore is going big, isn't it?
Yeah.
All right. Let's go to the refineries. And this one was a big one. The title of it is U.S. oil refineries set for a strong Q4 earnings as margins stay high. There's a couple big pieces of this. We talked a few days ago about, I believe it's Exxon building on to a new refinery in Texas. And it's one of the biggest updates that they've done. But when you take a look, this one right here, this paragraph is Valero. I'm going to read two paragraphs here. Valero Energy, the second largest U.S. refinery by capacity, kicks off earnings Thursday with a projected share of $7.19, nearly 3 times the 247 a year ago. Give me a whoop whoop, dude.
Whoop whoop.
Okay, I can't do it. All right, now let's go to top refiner Marathon. Petroleum is forecasted to show $5.70 per share compared to a 127. So refining is absolutely profitable. I'm hoping they can just keep them open because they're running at what 87 to 98% capacity, and you really need them to shut down to do maintenance. I'm a little worried about that sometimes. Does that make sense?
Yeah. I'd love to own some refineries, both whether it's in stocks or dividends. So I will take it. But again, as this article does mention, the U.S. crack spread, which is the measure between the profit between the buying oil and selling gasoline and diesel, did peak last quarter at $45. So it'll be very interesting to see, and that's more than double the peak. So I don't know, if where they go from here, there's still upside. I would probably lean bullish here. Amazing Crescent. 140.
This is a bigger envelope, bigger question.
All right. Anything else?
No, I think we're good, dude. It was a lot of fun, good conversations. It's up to you. Hey, it looks like we're getting a lot of downloads, dude.
Yes, I'll finish up with some finance here. Currently, as we record, this is about 6:45. On the 25th, oil trades at 80.48. Natural gas trades at 295. Wolf. We'll start with crude oil. Fairly relaxed today. We saw a slight crude oil build of about 5 million barrels, which relative to the increases we've seen is not terrible. You can check that out and all of those numbers via the dashboard. Speaking of that, I had a great call about the dashboard today to give you guys a little inside scoop. We're rolling out V2 here very soon. V2 is very close to coming out. We've got a lot of great stuff in the works.
I'm a little old, but V2 is version 2 of the Energy News Beat dashboard. Is that correct?
Yes. I don't explain it because if you don't know what V2 is, you're dumb. And I don't care about your opinion. Just kidding.
I know you don't. So
I'm just kidding, but also not really. Guys, as I mentioned, it was a 500,000, not a 5 million, 500,000 barrel increase in crude oil stocks. So relatively flat. I think that's partially why you don't see stocks move as much. Again, we're dealing with increased production going on in terms of the future forecast, but I think that's being met with adequate demand, specifically coming from China. And COVID is long behind us. So I think we have to get back on the constant theme of growth as we move forward. Over on the natural gas side, guys, I mean, things just seem to really be going south. No pun intended for natural gas. With this milder to cooler or to warmer January, February coming in, with the prospect of huge natural gas supplies, with Freeport only being able to export 2 BCF a day, when we might see a storage increase this week. To give you an idea, Stu, analysts, as you listen to this podcast on Thursday, you'll know, but the expectation is that the range will be a draw between 76 million and 94 BCF. Last year, we drew 217. So, we are way below normal draw amounts. And I think that is weighing heavily on prices right now. I will again stand at the rock and take one for the team and say, I got natural gas completely wrong. I thought we were going to be at $10, but there's why I get paid the small bucks. So that, Goldman Sachs just rolls me out when they need some sort of, they need a bull to come. They just need somebody to roll out on CNBC and just, $10 gas, run our price back.
Yeah, you're the smart one here. I'm just the straight man.
Yeah, well, I'm better looking than you, so that's for sure. That's really all I got, Stu. Anything else?
Oh no, it's a great day in the Ozarks.
No, it's a great day. And, we appreciate everybody tuning in. We got a lot of great stuff coming up. We've got some great things in the works. Keep us rolling. I don't know what Stu's laughing about, but
I'll save it for tomorrow's show.
oh, sweet. Well, you might unexpectedly have Zika virus again. We might never know, guys. But with that, we're going to let you get out of here, get back to work. Thank you for checking us out. World's greatest energy podcast, the Daily Energy Newsbeat Stand Up. Check us out online, dashboard.energynewsbeat.com, energynewsbeat.com. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow.